Everyone, myself Vaibhav. In today's session of Market Movers, we will take a look on the S&P 500, which has struggled close to all-time highs, and after making a high closer to the 3,400 level, it has fallen sharply by more than 1 percentage point, and we will see how this is likely to affect its movements moving forward. If you consider the trading context for the day, we got the ECB's monetary policy meeting minutes during the European trading hours, and here, as expected, there was not much of an surprise announcement, but one key statement which stands out is regarding the discussion surrounding the PEPP, that is the Pandemic Emergency Purchase Program. Some of the members of the ECB's governing council are of the view that the target which has been adopted by the ECB at 1.35 trillion euros should be rather construed as an higher ceiling, not an explicit target, as the economy is doing better than the expectations. But I think we will see more developments or more discussion regarding these in coming meetings. So let's see how this will evolve in coming meetings in next few months and the quarter. Just a while back, we also got the US initial jobless claims, and now the jobless claims have again rebounded above 1 million. And I think this kind of signals the weakness which is persisting in the US job market in face of the ongoing coronavirus pandemic. And of course, we will see the figures hovering close to this 1 million mark at least for next couple of weeks. If we consider the equity market, most of the equity indices around the world are trading higher following the lead of US equity indices in yesterday's session. Even for today's session, the US equity indices are pointing to a gap down open. So I think the equity market participants have taken a rather bearish view of yesterday's Federal Reserve's monetary policy meeting minutes. And one of the prime reason has been that the Fed hasn't really said anything about further monetary policy easing. Rather, it is going to take a call on how the economic situation evolves. And as I said, the economic data has been better than the expectation, and also the Fed is pointing to the federal government and the U.S. Senate and Congress to work out toward the fiscal package. So because of that also, the uh, market participants have adopted a cautious approach. Now let's move on to the technical outlook for the S&P 500 and the gold XAU in terms of USD. Let's start with the S&P 500 technical outlook first. This is the daily time frame chart, and as you can see, we saw the S&P 500 climbing all the way back to its prior swing high. This is the all-time high, and marking a fresh all-time high, just tad higher than its prior high established 6 months back. But after that, we are again seeing some selling pressure, and the S&P 500 is trading more than 1 percentage point lower from the yesterday's high. And I think the near-term outlook is now shifting moderately to the bearish side, and we can consider this as a start of near-term bearish or corrective phase. And from scalping perspective, from short to medium term perspective, we can expect the S&P 500 to remain in a bearish to sideways trading range. So from that perspective, if we are going to look for any trading opportunity in today's session, then it should be of course on the short sell side. And I think the near term resistance stands at this high established around 3400. So unless and until that high is breached, I would say that we can adopt this swing high as our near term stop loss zone, and continue to look for short selling opportunities. Right now, the S&P 500 is hovering close to this first resistance, which is now acting as a near-term support, and the price action in today's session has been rather range-bound. And I think, given the fact that the price has also moved to the lower band of this regression curve, we will, of course, in due course of time, we will see the flattening of this regression curve. And if there is a further break below this immediate level, which is also the prior swing low, as well as here, as I said, the first resistance of this month's pivot point series. And now that it was breached earlier, we are looking it as a support here. And if it is breached on the lower side, we can expect this sell off to deepen further, and the levels close to 3300 can also be expected in coming sessions. So from the short term perspective, I would say that given the fact that this formation of higher low stands breached and we have new fresh lower low being formed, we can expect the formation of a lower high as well. And for us, the immediate marker can be this confluence of 50 and 100 SMA. The 50 SMA is around 3380, and the 100 SMA is also not far from that level. So we can use this confluence zone of around 3380 as our immediate marker. And as long as the price action is on the lower side and it is consolidating on the lower side, we can look for short selling opportunities, and a price band of 3370 to 3380 should be good enough for taking fresh entries for sell trade in the S&P 500. And as I said, the stop loss of around 3400 should work fine. And that means you will have to take the risk of around 1 percentage point. And on the lower side, we can target the price zone of around 3300, so that we will be getting the risk reward ratio of 1 is to 2. And if we see this price action sustaining itself below this 200 SMA, then in due course of time also we will have the 50 SMA crossing below the 200 SMA. That is that will be the formation of the death cross. So we will have additional confirmation for the bearish stance. Now let's shift our attention to the XAU in terms of USD. The gold has also fallen sharply after the release of yesterday's FOMC meeting minutes, and in today's session it is hovering close to 1940 after having fallen almost 3 percentage point from the levels close to 2000. And it increasingly looks likely that we might see the gold retracing toward these 38.2% Fibonacci retracement of its price from 1450 to little above 2050. So if we see from the longer term perspective also, if we see that gold enters into a correction phase and goes on to touch even this Fibonacci retracement, that will be only a corrective phase. And from longer term perspective, the things won't really change much. But from short to medium term perspective, we will have to adapt a sale on rallies approach if we want to make money in this kind of market. And of course, the sharp moves are happening, so we have to be cautious as well. Now coming to the 4 hourly chart, we have this regression curve which has bent sharply on the lower side. As I remember, a couple of sessions back we were looking at the gold from the perspective of buying. That didn't really go well, and now after the break below crucial levels, we are now looking at the short selling opportunities here. And this immediate swing high can be a crucial marker for us. And I think we can expect this central pivot point of this month's pivot point series to act as a near term support, but in due course of time it should give way if the bearish momentum persists. And we can expect, as I said, the 38.2% Fibonacci level, Fibonacci retracement level, as well as we have this first support of this month's pivot point series coming in around the same level. So we can expect the price to move toward this 1830 zone in coming days. If that is the case, we have to utilize this confluence zone of 50, 100 and 200 SMAs, which is there around 1970 for the entry purpose. So I would say that any entry closer to this resistance zone is going to offer us an excellent risk reward ratio, and the entry, if it's anywhere closer to this 1970 zone, the stop loss can be just little lower than 2000 or closer to 2000 zone, and we can expect with the risk of around 30 points. On the lower side, we can expect the targets around 60 to 70 points. In percentage terms, this is a tad wider. The stop loss and targets are not exactly sharp. We are taking a risk of around 1.5 percentage point, and to compensate that, we are taking a reward target that is of around 3 percentage points. So the risk reward ratio works out around 1 is to 2. And now that we have a fresh break below this upward moving price channel, also that will also act as a further confirmatory factor. And we also have the fundamental developments which are pointing to the conducive environment on the fundamental side for the gold bearish stance. So taken together, the technical as well as the fundamental factors, we have the reasons to believe that it will be beneficial for us to adapt an bearish stance. But of course, to cut down on the risk, we have to see that the entry points are also optimum, and from that perspective we will have to wait it out for the time being, and if we are fortunate enough, we might get to enter into the trade closer to our desired zone. But for that, we will need the gold to move higher from the current levels and then consolidate at least for a couple of hours, and after that we will be in a position to go for a fresh trade in the gold. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.